Hello and welcome to another update video about the DXY, certainly one of the most important charts at the moment. I showed you yesterday the longer time frame chart. Just a very quick recap for everybody who's new. My view is that the DXY bottomed in a wave 4 in 2008, and since then we have been moving up. And by the way, this is not the log chart. We've been moving up in a so-called leading diagonal of a wave 5. So to this wave 4, there will be a wave 5 in the far future where we will peak, but that's probably years away. But we have possibly now completed the first wave. Yeah, a 5-wave structure. The first wave of this 5th wave that I've talked about, which will be somewhere up there, yeah, somewhere. Don't look at the numbers here. That's not really anything that we can easily forecast at the moment without knowing how low will the wave 2 actually go. But yeah, it looks like we've done a wave 1. It could still be ongoing, but if it is, it's sort of similar to the, it's sort of at the, on its last legs really. But yeah, 5-wave move can be counted as complete. So let's zoom in. We can see that this wave 5 of the wave 1 is a 5-wave move. It can be counted like that. 1, 2, 3, 4, 5. And from here we could have started the wave A. Yeah, we talked about this weeks ago. We said if we drop below 110, it's most likely going to come down. Yeah, I would say in the $100 region, which we have done. Yeah, we've come down to 104. I think we could still drop a little bit lower. We'll take a look at that in a minute. But there's two scenarios. And I showed you these yesterday as well, and they're both still relevant. The first one here, this ABC structure in a wave 2. Now, it's not accurate where I've placed the wave B, because the wave B target really depends on how low do we go in the A wave. I'm looking at something around maybe $110, $111. That would be ideal for the B wave before we come down in C. Bear in mind that this uptrend in the B wave, first of all, it will be very hard to trade. A B wave is unpredictable. Maybe not entirely, but it is very hard to forecast, very hard to trade, because they can be short, they can be long, they can be choppy. So be aware of that. And then there should be a C wave down. And this B wave to the upside will most likely have quite a negative impact on crypto, on stocks and shares, and so on. Yeah. This is one scenario, and I'm going to show you the lower level detail in a minute. The other scenario is that this wave 1 actually isn't finished. Yeah. And that the wave 1 will actually be finished somewhere here, and I will say that a very likely target for that is the $121 level. That is the high, a very, very, very important structural high from 2001. Yeah, this $121 level. Now, if we say it is not finished yet, then I would consider the current decline as a wave 4, and we move up in a wave 5 to finish off this wave 1. So also here in this scenario, we would very, very shortly turn around and move up. The difference between this scenario that I've got on the chart and the wave 4-5 scenario that I've just mentioned, the difference is that the move up will be impulsive in that 4-5 scenario where the wave 1 isn't finished, whereas in the scenario I've got on the chart here, the move up will be corrective, and we should be able to distinguish them. So we will know along the way with a high likelihood. Yeah, you never know, but we will be able to tell with a high likelihood what kind of pattern is evolving. So let's go into the lower level wave count, because looking at the lower level, these two scenarios don't really have a great difference. We look at this as an A wave down. Now, in the very short term, it could be that the A wave is already done. But at the moment, as long as we are staying below a certain level, I assume we are going to get one more leg down in the A wave, possibly to retest the $100 level, which is quite an obvious target. But if we look at the wave count like that, then we can draw the fibs of the blue third wave, and we can say that below 100, no, let me see, it's actually below the 50% retracement, which is at $107.72 roughly. Below that level, I am in favor of a continuation to the downside and another 5th wave that we will put in. If we get above that level, we have to assume the low was already in. Yeah, that the low was already in will already get more likely above $106.88, because then we break above the ideal target for a fourth wave. But bear in mind, a fourth wave can also extend out to a 50% retracement. So that's why it really is only above this level that we can consider that the low was in with a very high likelihood. But until then, I am in favor, based on the wave count, I'm in favor of one more leg to the downside. What else is to say? Well, you can also use possibly here trend lines. Let's see. They're not great, are they? Because there's different ways of how these can be drawn. Yeah, they don't probably help you because you don't really get a very clean clean trend line. Even though if you just draw it like that, and you probably have 2 or 3 touch points here, and then you draw trend line like that, and you've got your descending wedge, which would suggest that very shortly we're going to break out to the upside. So that matches the assumption and the scenario I've been talking about actually quite well, because a descending wedge is normally to be considered a bullish reversal pattern. You don't get wedges normally in Elliott wave, you don't call them descending wedge, but still when you see a pattern like that, you can use it quite nicely together with Elliott wave to confirm your analysis. And I mean, here you can clearly see it, that the downward pressure is reducing. That is typically when such a wedge pattern occurs. In addition to that, we see a slight bullish divergence, actually quite a noticeable one on the 4-hour chart. We make higher lows on the 4-hour chart, yeah, and lower lows on the price chart. So that indicates that shortly we should see a move to the upside. Yeah, it's always, it doesn't mean it has to happen today, it doesn't mean it has to happen tomorrow, but it's an indication that things are changing because these sellers are getting a little bit exhausted. Looking at this on the 8-hour chart, you can see the same bullish divergence. So it's just more meaningful on the 8-hour chart. And on the daily, which is even more meaningful, we're nearly crossing above the 0 line. So a possible bullish cross here. A bit too early to confirm that. As I said, I'm rather looking at those fib levels. And here we have a very, very slight bullish divergence on the daily. Yeah, and a bullish crossover now. But it's not enough for me to confirm a bottom. I think, you have the bullish divergence, which tells you that very soon we're probably going to bottom. So watch is the, watch the chart is the message. And then if we break above that, what did I say, $107 level roughly, yeah? Plus a break out of the wedge to the upside, all of these are indications that the low has been made. Okay, that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then also check out the channel membership. Thanks a lot for watching. Bye-bye.